And as Kristen mentioned there, the markets, of course, are rallying, coming back strong. Let's speak now to William Lee, who is Chief Economist for the Milken Institute and Deputy Division Chief at the IMF. He joins us from Henderson in Nevada. Thank you for being with us. So let's break this down then. Relief in countries around the world, of course, at those markets rallying. But with Trump raising the tariff charge to China to 125%, effective immediately, does this signal a brutal trade war between the two countries?
I think what we have seen today is the strategy that President Trump has announced from the day he was elected, which is to say he wants to incentivize countries around the world and investors around the world to invest in the United States. And he's going to do that with a package of policies. The bulk of the package consists of trying to get smaller government, fewer taxes, less regulation, and also this incentive policy to get foreigners to invest in the United States to create jobs. This trade war that we've seen so far is using tariffs as sort of a wedge and a negotiating a tool to let investors see and realize how important the U.S. market is to them. He's saying, look, if I shut you off from the market, many of your most important and largest companies are going to suffer by not having access to the U.S. market. And he demonstrated that in the last several days with these reciprocal tariffs. Now, you can argue that those reciprocal tariffs were really outsized and had no correspondence to the actual tariffs that U.S. companies were facing. But Donald Trump was also making a very important point, which is to say it's the non-tariff barriers that have been substantial hindrance for American companies to sell abroad. Non-tariff barriers are quotas, administrative rules, quality standards, health standards, things that countries put up as barriers to allow Americans to export there. That is the entire package that he wants to negotiate. And we heard from Secretary Bessent that in a meeting with Donald Trump on Sunday, 3 days ago, they were working out exactly this strategy to try to see what it would take to get countries to come negotiate seriously. And you see that the result is 75 countries that decided to come negotiate. Some of our larger trading partners, like South Korea and Japan, have decided to come. Now, China is really the real elephant in the room. And your question is really quite relevant. Why China? Why not China? And I think Donald Trump is saying for the last 40 years, he's been trying to get this tariff situation and this imbalance with China put to bed. And the reason why is because the World Trade Organization, WTO trade system that was set up after World War II was done in a way that allowed countries to recover, because right after World War II, the United States was the only economy in the world that was healthy. Now, in the 21st century, we need a completely new trade framework. We have China and the U.S. as the two largest trading partners in the world. We have EU. We have enormous number of countries in the Middle East and in Asia that are now rising into the middle class. We need a new trading system that is now going to be appropriate for these kind of new trading partners that are now powerful countries to deal with. And that's what Donald Trump is trying to do. And what he's saying is bilateral negotiations, small regional trade agreements, those are the way to go to get trade arrangements that will be appropriate for this 21st century trade in not just goods like manufactured goods, but intellectual property and services. Those are where the Middle East, for example, is going to be very, very integral part, because the Middle East is learning that it needs to get beyond being a commodity exporter into the world of artificial intelligence and the 22nd century world of high tech. And in that world, we're going to need a very different trading system that we have in the WTO. And Donald Trump essentially has said, the system is broken. I'm going to demonstrate to you how it's broken by raising all these reciprocal tariffs. And now let's negotiate bilaterally and in small groups what the new trade arrangements are going to be.
Well, William Lee, you've pretty much summed that up in a nutshell there. So we don't even need to ask you any more questions, because that was so succinct, and expertise there, much appreciated. So William Lee, Chief Economist for the Milken Institute, we thank you very much.
Thank you for having me.